You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is time once again for TWIFO. This Week in Futures Options, the program where the name says it all. We're going to break down the week that was and indeed still is on the futures options, trades and trends and analysis, unusual activity, what's lighting up the tape, what's the skew telling us, what's the vol, all that fun and a whole bunch more. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. We're pleased to see so many of you folks joining us, not just on TWIFO, on demand towards the end of the year, but, of course, a lot of you joining us there in Secret Club land as well. You know where to go to learn more, theoptionsinsider.com/secret club. Glad to see so many of you are having fun. You participate in our pro Q&As, participate in our options oddities, of course, the giveaways, all the other fun stuff, live stuff throughout the week. Endless amounts of fun over there. And of course, however you listen, live after the fact, YouTube, smart speaker, podcast platform in Estonia, whatever floats your boat out there. Keep sending those questions and comments. We do love to hear from all of you folks out there. That music. That can only mean one thing, listeners. No, the show's not done. We got a lot more in store for us, but we're going to kick it into high gear yet again. Last week was our week in review show, but we're missing a key piece of data. You know, when we do our last week was our year in review show. And you know, when we do our year in review shows, we like to also break down the actual hard data, the numbers. Everybody talks about correlation and how things move together, but no one actually crunches the numbers. We did it for you this week. We wanted to do it on last week's show. We always like to do our end of the year show with a bit of a correlation rundown, a correlation breakdown, if you will. Unfortunately, speaking of breaking down, the tools were in the process of being upgraded and updated right as we were doing the show last week, so we couldn't bring you that portion of our 2021 year in review spectacular. So we thought, let's do that now. Why don't we? Let's dive into all the fun that is our 2021 year in review. Surprises, strong upside, strong positive correlation, negative correlation. What the heck leapt off the page at us over the past year? Then, as an added bonus, because we made you wait for a week, we're going to throw in the entirety of the pandemic. How have all these assets, how they performed together, maybe negatively, maybe positively, how they correlated since the pandemic began. Remember, that's where correlation really counts. Not in these quiet years and nothing much really happens. It's when it hits the fan, that's when correlation numbers really matter. So we're going to run those as well. But we're going to start off looking back at the mad year that was 2021. So let's break down some of our strongest positive correlations that we found, as well as the strongest negatives, and we'll get into maybe some surprises. I know a lot of you want crypto and Bitcoin as well, so we'll do those as well for you. And a lot of the correlations you're going to see that are the strongest are going to be within the same complex as listeners. And that certainly was the case last year. In fact, for the year of 2021, we had a pretty much effectively 100% correlation between the leading ags. So soybeans and wheat and corn were all effectively a correlation of 1 last year. Listen, that's how close and how aggressively the ags are moving last year. So if you're in the ag camp, it kind of didn't matter where you were hanging your hat last year. Beans, wheat, or corn, you had a correlation of 1 pretty much across the board. That's going to be our top for the positive. Kind of hard to beat that for positive correlations last year. Right behind it, though, we had heating oil and WTI, 95%. Obviously, a high degree of correlation between those as well, and we saw that exhibited last week. Same deal with RBOB, same complex, obviously. RBOB to heating oil is at about a 94% out there. And then we go out to another complex, the rates, 30-year versus the 10-year, 89% correlation. Now we stay in same complex again, but this time going to the equities. The E-mini NASDAQ versus the S&P 500, 88%. So people have been talking for a while about S&P and NASDAQ. Similar beasts, and you can see those numbers right here, 88% correlation between the NASDAQ and the S&P 500 last year. You might be wondering, where do small caps fit in all there? Well, good question. Comes in right there, right below the NASDAQ and the S&P at about a 77% correlation, which is interesting, given the fact that, obviously a very different group of companies making up the Russell 2000 than the S&P 500, but still a 77% correlation there. And of course, the ratio, a lot of people watch on a regular basis. How's silver holding up versus gold? And that one's at about a 75%. So gold to silver at about a 75% last year. Let's get to the dark side. Let's get to the negative correlations. The strongest negative correlation of the year last year. If you said rates versus energy, you get a winner chicken dinner, listeners. The 30-year versus RBOB, 34% negative correlation. So if you're looking for a little bit of diversification in your energy portfolio, you maybe could do worse than the 30-year. Also, and this one has been a surprise correlation factor for a couple of years now, popping up on our radar again last year, the yen. The yen popping up in places that you would not expect. Actually, so I said it was the 30-year versus RBOB. It actually was a tie for the strongest correlation, negative correlation of last year. It was the yen versus RBOB as well, also at 34% negative correlation. So the yen and the 30-year versus RBOB. If you had that on your bingo card, you're a savvier fellow or lady than I. All right, so let's go out to our next. Right below it. We have 32% negative correlation. Again, we have a tie. We have the 30-year, once again, 30-year popping up, this time versus heating oil, so staying in the energy camp, and then the 30-year versus WTI. So again, rates versus energy, and everyone always talks rates versus equities, but we're not seeing that on the top of this list. We're seeing rates versus energy. Again, kind of getting back to the the argument that maybe the rates complex maybe didn't perform as expected throughout 2021. A lot of people who have been relying on rates for their diversification tools were not exactly enthused by 2021. And I think some of these numbers would bear that out. You expect to see the rates and equities in here somewhere. And when we're not seeing that, instead we're seeing rates versus energy and the yen versus energy popping in over there. And then at the bottom of our list there, 27% is 10-year versus WTI. So again, rates versus energy, strongest negative correlation. So again, all of you out there have been doing your traditional 60-40 portfolios or maybe 60-30-10. That 40 or 30% portion of fixed income hasn't been kicking in perhaps the way you anticipated out there. Let's get to the one a lot of you like to know about, which is crypto. How did crypto, in particular Bitcoin, because that's the one we have the most data for. Ether, still a bit of a new beast over there at CME. So Bitcoin, how did Bitcoin stack up in 2021? People have been arguing for years now. Is it a positively correlated asset? Is it a negatively correlated asset? Is it an uncorrelated asset? Well, for last year, it was a surprisingly mostly non-correlated asset, quite frankly. Didn't have a lot of strong correlations in one direction or the other. The few you could point to, and again, so those of you who are out there slinging small caps, maybe a little bit of a concern. 26%, the strongest correlation we found was 26% positive correlation. Bitcoin to the Russell 2000 last year, which is interesting. I think you can argue there's an overlap in some of the traders of those as well. 25% also, so number 2 was Bitcoin versus copper. Again, not the ratio most people talk about when they're talking about Bitcoin correlation. They talk about gold or something else. They don't usually talk about copper, but copper number 2 there, 25%. Number 3, 24% Bitcoin versus the S&P 500. So again, over the past year, and again, which was a insane year for both the S&P and Bitcoin. So bear that in mind. But those are the years when it matters, right? Let's see, 24% correlation, Bitcoin to the S&P 500. In the surprising realm, 19% correlation to the British pound. And if you want to know Bitcoin versus RBOB, 18%. So energy peaking in there in some surprising areas that you may not expect. The negative correlation for Bitcoin, the strongest negative correlation it had was negative 8%, which isn't much. It's barely correlated. That's to the 30-year, and then 6% to the 10-year. Interestingly enough, the one everyone always talks about, Bitcoin versus gold, is Bitcoin digital gold. Well, last year, the correlation between Bitcoin and gold, negative 2%, effectively uncorrelated. So all that talk about Bitcoin and gold, at least for the past year, didn't really hold up. Those two kind of marching to the beat of their own drummer. All right, let's extend the dial. Let's turn it all the way back now to the beginning of the pandemic, March 1st of 2020. Since then, since the madness really started popping off, listeners, how have all these products you've been looking at, how have they performed? The old adage is when it hits the fan, correlation tends to go to 1. Let's see what we've got since that period. And let's go to the positive side first. Keep it positive. The strongest positive correlation, again, a tie for first place, both at 91%, is the NASDAQ to the S&P 500. So not really surprising there. Right behind it, or should they right next to it, they're tied, 91% as well for the 30-year and the 10-year. So intra-complex correlation, not exactly surprising. You probably, if you had to guess, you'd pick those two as would be somewhere in the top there. Number 3 is the Russell 2000, 88% correlation since the start of the pandemic to the S&P 500. That link between the Russell 2000 and the S&P 500 is interesting. We'll have to get the folks from Russell back on here to discuss that a little bit, because that certainly surprised me that it would be that strong over the course of the past few years now. Since the onset of the pandemic, Russell 2000 has been known to kind of do its own thing, but since the pandemic has begun, 88% correlation to the S&P 500. We'll have to talk to them about how that looks compared to its historical correlation to see how that measures up. And then number 4, down to 81%, heating oil to WTI, some more intra-complex correlation there. And number 5, 75% for the Russell 2000 to the NASDAQ. So the correlation for the Russell 2000 to the NASDAQ, much weaker, much lighter than it is to the S&P 500, which again, is somewhat surprising, I think. I want to talk to the FTSE folks about that, see how that falls in their research. Let's get to the negative side, the dark side. The strongest negative correlation since the start of the pandemic. And this maybe helps to redeem some of you rates folks out there. The 30-year versus the S&P 500. Not quite the maybe 50% or more you were hoping for with these bad boys, but a negative 33% since the start of the pandemic. That's the strongest negative correlation we've seen here. So that helps to if you're lamenting your performance of rates over the past year, if you dial it back to the beginning of the pandemic, a little bit of a different story. Number two, 32%, so right neck and neck there. Again, the yen popping up in surprising places. Negative 32% correlation from the yen to heating oil since the start of the pandemic. Yen has been one of these weird ones popping up on our radar since the start of the pandemic, and here it is again. Number three, another interesting one. Negative 30% correlation, the 10-year to the Russell 2000. Russell 2000 popping up all over the place here as well with some surprising correlations here. A 10-year to the Russell 2000. Did you have that on your bingo card? Number four, another interesting / surprising one. A negative 28% correlation, the 3-month euro dollar, so a very specific range of the euro dollar, versus heating oil. Again, energy popping up all over the place here. And number five, we actually have a tie, so 5 and 6, both 27%. The yen, once again, yen versus Russell 2000 and yen versus S&P 500, both at negative 27%. So yen popping up here, energy popping up here a lot, Russell 2000 popping up here a lot, which is kind of interesting in the negative category here. Let's go to the old BTC. How has that fared from a correlation perspective since the onset of all this madness back in 2020? The strongest positive correlation Bitcoin has had. And again, this may be a bit of an arrow against the folks who argue that Bitcoin is not correlated. Since the start of the pandemic, Bitcoin versus NASDAQ and Bitcoin versus Russell 2000, both tying for number one, 33%, so roughly a third. So you can't make the argument that since the pandemic has begun, at least, that Bitcoin is uncorrelated to the major equities. That is the strongest correlation we've seen. Number two, 31%, Bitcoin versus the S&P 500 out there. Number three, perhaps a surprising one out there, Bitcoin versus copper, 28% correlation. Number four, another surprising one, 27%, Bitcoin versus RBOB. And number five, 26%, actually a tie for number five again, both at 26%. Bitcoin versus silver and Bitcoin versus copper, both at 26% positive correlation out there. So intriguing. Again, for the past year, we saw a lot of Bitcoin kind of doing mostly its own thing. But if you extend it back to the start of the pandemic, we saw a lot more positive correlations popping up on the map here. So all those out there maybe in the Bitcoin camp are arguing, oh, it's its own beast, it does its own thing. These numbers may argue against that a wee bit. Let's look at some other surprises we noticed out here. We threw some interesting categories and classes in there just to see how they stacked up. One of the biggest surprises we've had since the start of the pandemic has been, we talked about it before, Class 3 milk. I've mentioned it's been popping up on our radar, popping up on our movers and shakers a lot more. One of the interesting things we've seen, if you want a truly non-correlated asset class to just about anything else we have here on this list, it's not Bitcoin. It's Class 3 milk. Class 3 milk is completely its own thing. Against every asset class that we ran it, the strongest correlation we could find was a 10% positive correlation to heating oil. So if you want a completely diversified asset class, going to do its own thing, then completely non-correlated, you could do a lot worse than Class 3 milk listeners. Some other surprising correlations we found. Bitcoin versus gold since the start of the pandemic, the one everybody talks about, only 18%. So obviously it was stronger than this past year where we said it was only negative 2%. So pretty much uncorrelated last year. Since the start of the pandemic, a little bit stronger, but still only 18% positive correlation. In fact, that's the exact same level of positive correlation as we saw between Bitcoin and live cattle. And I don't hear anyone out there trumpeting the correlations between Bitcoin and cattle, saying Bitcoin is the digital cattle. We have not heard that. So for all of you out there beating that drum of Bitcoin is the digital gold, from a correlation perspective, since the start of the pandemic, not exactly the strongest ties there either. Some interesting stuff. A lot of surprises to be found there. If you can mine this for yourself, if you are users of the premium stuff over there, quickstrike.net, QUIKSTRIKE.net, or bantix.com, BANTIX.com is the place to go. You can start for a free trial there. All the TWIFO stuff is always available every week for free. If you want to go above and beyond, get into some of the really cool tools they have there, including this, the cross-asset correlation tool. You got to kick the tires and light the fires over there at Bantix. I guarantee if you're trading these products, there's some great data in there. And why go by what people are speculating or talking about online? You can see the hard numbers for yourself, how these asset classes stack up. Maybe you want to get a little classy milk in your life after seeing these numbers. Either way, intriguing stuff. Check it out over there as we check out the movers and shakers for this week.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, let's get to it. The Movers and Shakers listeners this week. You can find this. Usually our friends over there at CME tweet it out right before showtime. So if you're following them, you could see it. We always retweet it and share it as well. So if you're following us at Options on most of the social media platforms, you could see this report for yourself. Otherwise, you got to have the premium tools to get access to it. And if you've been following the news this week, maybe the number one mover to the upside won't surprise you. I'm going to start to the dark side, though, because why not? It's always fun. Number 5, back in the dark side this week. And again, it's kind of a lean dark side week. I think it's clearly more than 2/3, maybe 3/4 light side this week. So kind of hard to scratch together a dark side, even though the number 1 to the dark side has some heft, has some grit to it. But the number 5 on the dark side, pretty light. Only cost you 0.87% to the dark side to break into the bottom 5 this week. It gets you to the Russell 2000. Number 4 is corn, off 2.03%. Number 3, lean hogs, off 4.88%. Numero 2 is euro dollars, off about 5.5%. And number 1 with a dark side bullet this week is oats, off 6.34%. Again, before you ask, you know the deal. Oats, not really an options product, unfortunately, so we'll have to keep our powder dry there. To the light side we go now. Bitcoin is up 2.5% this week. Can't even make the top 5, listeners. Only number 8. Number 5, though, is RBOB. Cost you 4.16% to break into the top 5 this week. That gets you to RBOB. Number 4 is copper, up 4.34%. Number 3, it's palladium, up 4.57%. Numero 2, heating oil, up 5.54%. And number 1, with an aggressive bullet this week, NatGas, up 17.63%. So I think we got to begin our journey in the energy, listeners.
It's time to tap into the deep options well of black gold, Texas tea, NatGas, and more. It's time to talk energy.
All right, listeners, let's get to it. Time to talk some energy. You guys know where to go to find these reports for yourselves. CMEgroup.com/TWIFO will get you to the free version. If you have the premium over there at Bantix or QuickStrike, just log in there. Go on into the drop down, go to asset class, go to energy, then right below crude oil, you'll see NatGas. Choose the top selection for NatGas, and you'll be off to the races. And you'll see that there's a wee bit of paper hitting the tape this week, 614,000 contracts. That's a lot of paper for NatGas. Of course, this movement, this paper probably doesn't come as a surprise, given the headlines we've been seeing out there. Putin doing a fair bit of saber rattling, I think, over there on the borders of Ukraine, massing 100,000 troops, trying to strong arm NATO with the negotiations. Not going well this week over there. So not surprising that would be reflected in NatGas. Obviously, you're talking Ukraine and Russia. The first thing everyone thinks about is, of course, energy and NatGas and the pipelines. Of course, some of our listeners have asked about wheat. That's certainly a player as well. But NatGas feeling the effects out there this week. I forgot who was asked about wheat, but we don't see wheat on the movers and shakers this week. So perhaps wheat, not a big concern, as much of a concern really as NatGas when it comes to Russian aggression over there on Ukraine. Just this week, NatGas is up 9.75% at about a 4.30 when we kicked off the show, listeners. And again, if we extend it to last week's show, up 17.63%. So that's a pretty nice lift for NatGas. And reflecting again how a lot of this is driven by current news phenomena, what's going on out there. 600,000+ contracts on the tape this week. 35% of that going up in the Feb contract that goes away in 13 days. So NatGas trading like an equity right now. Everyone wants to get in on the front portion of the curve, get a lot of high gamma, high bang for your buck type, high movement sensitive type contracts out there. So let's hang our hat out there. It's within our 14-day cutoff, but just barely. We can make an exception for NatGas. It's a lot of paper. You're talking nearly 200,000 contracts going up in this Feb expiration cycle here. Let's go to the vol. If you're wondering, what is the vol in that contract? It's pretty frothy. You know, NatGas can get up there into triple digits sometimes. Not quite there right now, but it's up 25 almost points this week, 2470 points. It's up to 7720. So again, that NatGas vol getting juicy. Again, take vol with a 2-week to go contract with a bit of a grain of salt, mostly gamma there, but still. That's a lot of juice out there. And in terms of the skew, we saw the puts last week, 9.5%. Cheap to the at the money. And again, if you're confused by all this, we had a great pro Q&A with Nick Howard, the guy who created all this stuff. Just this week, he broke down how to analyze this quick skew in more detail, how to analyze the shift slide tools in a lot more detail. So if you're in the Secret Club and you missed that one, check it out on the Pro podcast feed there, because it'll give you a lot of insight into how to use these tools in your own trading. Quite simply, if you're not using these to analyze things like skew and vol and the hot contracts, you're missing out. Even if you don't trade these, it's great information to have, and you can, of course, apply it to the equity indices and things out there as well, which I know a lot of you are keen watchers of. This week, the put's 4.3% cheap, so the put's getting a little bit more bid. Again, the vol's surging in, so not surprising. And then last week, the calls were super bid, nearly 13% bid. This week, we've blown through so many strikes that they've come in a little bit, 7.4% bid out there. The shift and slide, talked about that with Nick this week. Shift 19.62 and the slide 5.05. So again, we broke down how that works, how much the skew curve shifted versus how much you slid along the curve. So again, check out that pro Q&A if you want to break down what the hell those numbers actually mean. And in terms of the most active contract, I said we're at about a 430 when we kicked off the show today, listeners. It was nearly 30,000, 29,879 of the Feb 5 calls. So the 5.0. So we're still 70 cents away from that strike. These are going out in 2 weeks. They were lighting it up all week long. Again, nearly 30,000. The biggest day was Wednesday, 12,000. About 8,800 going up today, and 5,500 on Tuesday, 3,300 on Monday. Back and forth opening and closing all week. So no straight bias one way or the other. Obviously, this has been a hot strike all week. People buying and selling, opening and closing all week long. But interesting. The 5 calls going out in less than 2 weeks. Can we get there? Think we can hit the 5 handle in less than 2 weeks, listeners? If some of the news coming out of that region is to be believed, then we could get beyond that maybe if some of this stuff starts popping off over in that neck of the woods. Follow right behind it, listeners, about almost a little over 21,000 of the 4 puts. So it's not all calls all the time. 4 puts going up, mostly opening all week. The big day was Wednesday, 11,500. A good chunk of that opening, followed by today, 7,000. Obviously, we don't know today's OI status. And then Monday and Tuesday kind of light, only about 1,400 and 1,200 respectively. But a total of about 21,000 and change going up this week on the 4 puts. Then we go a little bit farther out. The 6 calls, if 5 not optimistic enough, the 6 calls going out this cycle as well. The Feb cycle, about nearly 18,000 of those, almost half of those, 9,200 going up today, 6,500 yesterday. The rest kind of light scattered throughout the week, slightly opening on Wednesday. But again, it looks like a lot of back and forth on both the 5 and the 6 strike, which makes sense. That's a pretty aggressive level to hit just in the next couple of weeks. But if anything can do it, NatGas is certainly one of the products that can deliver a move like that. Let's go a little bit farther out than just the next couple of weeks. Let's see what we got. Let's go out to March. The hot product in March, the hot option in March, were the 6 calls. Nearly 15,000 of those going up this week. The big day was Tuesday, 6,000. A good chunk of that closing. So maybe looks like they were closing actually all week long. So some folks maybe getting the heck out of Dodge, taking advantage of this pop to close out some maybe 6 calls they had put on before in the previous rally and maybe never got a chance to take off, taking them off now. Either way, a lot of closing paper on the 6 strike in March, which again has longer to go, 41 days. And that's usually traditionally where we start to see the tail end of the seasonality, the bid for NatGas. But again, this could not be a traditional season because we have other factors at play other than the weather here. 6 calls also active in April, which has 74 days still to go, doing nearly 11,000 contracts. In fact, the 6 calls if you had to add them up across all the months, that was definitely the option du jour. We saw about 10,000 going up in April. We have, let's see, we have about almost 10,000 going up, a little over 10,000 actually going up in April. And in May, we have almost 10,000, 9,600. We have about almost 10,000 again in June, 12,000 going up in July out here. So the 6 calls pretty much active in every month. September, almost 10,000 as well. October, 9,000 going up in October. Someone got weird in November. They traded the 3 puts 1,300 times. But other than that, it's mostly 6 calls, pretty much all the way out through, looks like about November, or actually October. October seems to be where the 6 calls kind of fall off a little bit. So trading actively in the 6 calls all the way out to October. Listen, what do you think? You think that bid for NatGas can be retained that long? Again, if things heat up in that region, that's certainly a possibility. Crazier things have happened out here. Obviously, it's not the seasonal period where NatGas is hot here, and this is a U.S.-based contract. But as we've learned, this product has now become a global product. It's shipped all over the place. So if it's trading much, much more in another region, they will ship it there, and it will drag up prices here as well. So intriguing stuff here in NatGas. Let's just look really quickly, see if we see any other interesting. 3 3/4, pretty active once you get beyond the DEES expiration cycle. But all the way through to nearly the end of the year, 6 calls are where the action was out here. What do you think, listeners? Are you guys starting to pay attention to NatGas more? Is this one on your radar out here? Listeners, unfortunately, we don't see our old friend WTI in the movers and shakers out here this week. So instead, let's hang our hat next in the equities.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, listeners, let's do it. You know where to go to find those equities. Go back to that asset class, drop down, pop out of energy, go down a slot to equity indices. Then we'll head over. We'll hang out in the S&P first to kick off the second week here of the new year. Speaking of kicking off, before we dive into the numbers here, let's get to some vol numbers here. Vol generally down from where it was this time last week, but not as much as it was earlier in the session. Vol out there, the market's kind of getting a little bit more red. They were mixed, then they got some pretty red for a while there when we kicked off our option block show earlier in the day. Then, of course, we saw a little bit more mixed action breaking back in on the scene as the Dow struggled and actually got into the green again for a while. And then now here we are with, looks like we're heading back into sell-off range yet again. All the major indices are now back in the red. When we kicked off the show, though, a little while ago now, we had the RVX, which is the VIX of the Russell 2000, at about 25 1/3. That puts it down almost 2 points, about 1 3/4 points from last show, still firmly in the 20s. VIX cash was shy of the 19 handle, about 1870. It's ticked up back over 19 again now since we've been talking. But when we started the show, it was down about 1.13 points from where it was this time last week. VVIX, the vol of vol listeners, at about 117.5. A vol Q, the at-the-money vol of the NASDAQ 100, was at about a 22 exactly when we kicked off the show. That's down almost a point, about 0.9 of a point. Since the show has started, it has ticked up 1.25 from there. So it's actually 23.25 right now. So it's actually up slightly on the week. So NASDAQ vol, again, NASDAQ selling off pretty hard right now. So when we kicked off the show, that VIX to RVX, so that large cap to small cap vol spread, was at about a 670. That's about a little over half a point tighter than what it was this time last week. That's still pretty wide for that vol spread. Listen, usually it's a bit tighter there. VIX to vol Q, so the S&P 500 to NASDAQ vol spread at about 3 1/3. It's about 1/4 point wider than it was this time last week. And again, I know a lot of you like to sling yourselves some S&P, so let's get on out there, see what's lighting it up this week. Got some paper on the tape? Yeah, we do. 2.9 million contracts on the tape in the E-mini right now. And you don't have to ask, 1/3 of that is going away tomorrow because that's how equities like to trade. Everybody's very near dated, harvesting that old premium. You ain't got time to go out 3 weeks or 2 weeks. It's all front week, all front contract all the time. So we're going to scroll out a little bit, listeners. We're going to do our due diligence for you folks, get a little bit beyond the maelstrom and the madness, get to our next most active contract out here. And in that case, we're going to go, let's see, it's kind of hard to find one that is a decent cutoff. About 15% of the paper went up in the week 3 Jan contract that has 8 days to go. You know what? I have to just bite the bullet. Unless we can go out. March has 7.5. That's not much. Let's go out. Let's do it. Let's just do it. Let's go out a week and a day, 8 days. Again, we're going to violate our rules just because it's kind of hard to adhere to them when it's such near dated paper, listeners. You're talking pretty much half of the paper is going away in a week or less in the S&P 500. So let's go out here. Let's go out a whopping 8 days. By the way, S&P coming in at share time 46.75, up slightly on the week, 0.17. Of course, obviously today taking a little bit of that, taking a little bit on the chin out there. If we go into this week 3 Jan contract, the vol out there 15 and a third, up about a point. Again, it's a weekly contract, so take the vol with a bit of a grain of salt. Same deal with the skew. Last week, the puts were 16.7% rich. This week, 21.6%. So the puts getting bid up. Calls last week, 11.6% cheap. This week, 18.1% cheap. Man, they're coming for those calls. Let's just go a little bit farther out really quickly and just see how we look. Let's say in the March contract, look at a skew that's a little bit. Let's go to the end of Jan contract, 18 days. That has 7.1% of the paper of this week. The skew out there with, again, 18 days to go. The puts were 21.5% bid last week, 25.1% bid this week. The calls last week, 14.3% cheap. This week, 19.5% cheap. So nobody wants the calls. Everybody wants those puts. So again, that goes back to what we've been saying for a while. The vol out there is not super expensive right now. It's only 15.5 in that contract, but the skew is getting juicy. You're paying a 25% premium for those puts. So bear that in mind if you're going out there trying to hedge. You need a pretty aggressive, nay, apocalyptic move for these puts to really start paying off. And again, the calls super cheap. So collars looking terrible right now. The puts are super expensive. The calls are super cheap. It's kind of the polar opposite of what you want for a collar setup out there. If you want to know what the most active contract is right now, we're at a 46.75.5 right now in the S&P. It's the 4,700 calls going out tomorrow. Did 35,000 contracts. Actually, I take it back. That's not the number one contract. It is actually, let's see, it's got 5 days to go. So this expiry is on the 18th of January, this contract. It's the 39.75 puts. Did 93,000 contract. This gets back to what we were talking about with someone out there, listeners, has been just blasting away at these pretty far out of the money puts. I mean, these are 700 handles out of the money yet again. Traded 29,000 on Wednesday, 64,000 today. My goodness, I'll have to scan and maybe we'll talk about them on oddities later this week, what prices they got for those. But this has been a recurring theme. Someone out there harvesting the old volatility pretty aggressively in these puts. And so far, it's worked out for them. Again, this is the strategy where you have to have a plan because it works until it doesn't. And when it doesn't, it could come back to bite you pretty aggressively. And it doesn't have to go all the way down 700 handles, listeners, for these puts to start biting you. There's a lot of tail risk built into these. And we start selling off. You don't see these puts get bid probably to levels you maybe didn't expect. So this person looks like they're doing well for them because they're doing double today. They did 29,000 yesterday, 64,000 today. And they've been doing it for a while. I'm assuming it's the same person, but that's the old analogy we used to use on the trading floor, listeners, was you're picking up pennies ahead of the steamroller. So you gotta be ready for when that steamroller gets a little bit close. Let's head on out really quickly to the Russell 2000 as well, see how things are lighting it up out there. Pretty active week out there as well. 25,000 contracts on the tape. A third of that, again, in the contract that's going away tomorrow. The vol on that contract, 29, almost 30. We're going to skip past that one a little bit. Let's go a little bit farther out. 17% going up in the week 3 Jan contract. That has 8 days to go. By the way, Russell 2000 right now, right at about a 2170. And the vol, 23.25, actually in a little bit since the start of the week. Puts last week, 11.3% rich. This week, 14.2% rich. And the calls last week, 9.2% cheap. This week, 13.1% cheap. And the most active contract out here this week, it's the 2200s across the board. Now they're doing nearly 3,000 going out tomorrow. And it looks like, let's see, maybe looks like they might be closing. Let's see. And then also you saw, no, they actually were opening on Tuesday and then traded again on Wednesday and closed. Maybe they put them on Tuesday, took them off on Wednesday. Let's see. That's it could be. We were flirting with those levels. And then we also saw 2200s going up again on the week 3 contract expiring in about 8 days, about a little over 1,000 of those as well. So 2200s seem to be the strike du jour out there in the small caps, as well as the 20 half puts in March, doing about 1,000 contracts this week as well. So interesting stuff afoot out here. Let's see, listeners. We've hit on energy. We've hit on the movers and shakers. We hit on some equities, of course. We did the correlations for the year. But you know what, listeners? Before we roll out of the looking back on the year, or maybe even looking ahead a little bit as well, let's wind down this session with a little bit of some interesting insight we like to do on our shows this time of year, listeners, looking at what you folks think and what you folks are looking for from a Google search perspective. All right, there we go. It's that time, listeners. Time to break down the Google Trends data for the start of the year. We have a lot of different ways to analyze the data here. Of course, you have the correlation. We have the actual volume numbers. But of course, there are other ways to measure interest and engagement with these products. And one of the big ways is what Google is telling us people are interested in right now. So let's break down a couple of those right now. Obviously, you can go very broad and then narrow it in a little bit. So we don't want to look at just a term like futures, so that can obviously bake in a lot of other things into those searches. So we've made it a little bit more specific. We went to futures trading first. And again, Google Trends data, if you're not familiar, listeners, it shows you the peak and the general trends, as it implies, over the course of the past year, with the apex of interest, the top, the most search results coming, that gets the 100 level of the graph, and everything else is some percentage below that. So the peak for interest in futures trading, listeners, over the course of the past year came on the week of January 24th to 30th of last year. So almost a year ago, exactly. Here, that was the peak, that was the apex, that was the 100 level of the graph. Right now, we're a little less than half of that, about 44%. So we're less than half of the interest and amount of Google searches we're seeing in futures trading right now versus a year ago. Again, some of that is seasonal. Beginning of the year, end of the year, kind of a quiet period. Maybe if you wait a couple of weeks, it'll kick back up again. But that period a year ago, certainly a very active time. Of course, that was when we saw vol spiking, hitting its high for the year. We saw a lot of craziness popping off. The meme stock trend was beginning to really kick off then. So a lot of things were going on at the end of January. We're coming off the Jan 6 madness as well. So a lot of things were driving a lot of vol, a lot of action at that time last year. Let's get a little bit further down the rabbit hole. Let's go to futures options trading. Interest in that from a Google. Oh, by the way, before we get into that, where were the locations? Where was the most interest in these products and futures trading from a geographic perspective here in the U.S.? Number 5, the top 5 here. Number 5 was New Jersey. Number 4 was Colorado. Number 3, New Mexico. Again, these are per capita, so let's see some smaller names popping in there as well. Number 2, North Dakota. Number 1, D.C., District of Columbia, popping up there again. One of our listeners suggested in the live chat, maybe that's the regulators. That would be awesome if that is the case. If the regulators are driving interest in futures trading searches to the roof, that's awesome. That means they're doing their diligence, hopefully. The cynic in me says probably not, but you never know. Maybe their staffers are out there banging away on Google searching for these things. Futures options trading, get a little bit more specific now. That peaked last year, February 7th to 13th. So that week, that's when it hit 100 on the graph. Right now, it's less than a third, 30. Right now. So that has fallen off quite a bit. The top 5 destinations for those searches, number 5 was Florida. Number 4, California. Number 3, right here, good old Illinois. Number 2, New Jersey. Number 1, New York. I wouldn't have expected New York for number 1 for futures option trading. Again, NYMEX there, big rich history there. But interesting nonetheless. Get a little bit further down the rabbit hole. Let's go to commodities trading. That one peaked around the same time frame, but in between the other two, kind of splitting the uprights. It was the week of January 31st to February 6th. Right now, it's fallen off a cliff. Only 17% interest from the Google search data in commodities trading. Your top 5 destinations for commodities trading: Ohio, number 5 over the course of this past year. Number 4, Nebraska. Again, some overlap there, makes sense. Number 3, New York. Number 2, Oregon. I would not have guessed that one. And number 1, Missouri. Let's get a little bit more specific into the products. Let's go to gold. Gold trading. If you search for gold, that's going to correlate more with the product. Let's go to gold trading. Gold trading peaked that same week, January 24th to 30th. That's interesting. Never really hit that level again through the rest of the year. Right now, 17%. So a pale shadow of what it was at the end of last January. Where were the top 5 destinations for gold trading searches in the U.S.? Number 5, North Carolina. Interesting. Number 4, Hawaii. Number 3, New York. That one makes some sense. Number 2, Connecticut. My old stomping grounds. The governor there once buried gold coins in his backyard. Maybe that's what drove the interest in gold. And number 1, Idaho. Maybe those golden potatoes. I don't know. Either way, a lot of interesting gold in Idaho. Let's get to oil. Oil trading peaked February 7th to 13th, so a little bit later than the others, which is interesting. Right now, again, a pale shadow of what it was, down to about a 20, so about a fifth of what it was in early February of last year. The top 5 destinations for oil trading research here in the U.S. Again, not oil. That probably gets you some different areas. That'll get you Texas and all those areas, Oklahoma. But no, for oil trading, number 5, once again, right here, Illinois. Number 4, Maine. I guess the Rock Lobster has been searching up some oil trading activity. It hasn't been telling me. Number 3, Oklahoma. You'd expect that. Number 2, Nebraska. Not exactly a big oil mecca. Number 1, Arkansas. Again, interesting. Let's get the NatGas as well. But we can try we'll try the broad NatGas search term as well. Then we'll get to NatGas, natural gas trading. NatGas itself, again, it's going to follow more of the patterns of the underlying price. But the peaks for those searches peaked last year, February 14th to 20th. Right now, about a third of that, about 35%. The top outlets, the top destinations for natural gas searches last year: Georgia, number 5. South Carolina, number 4. Once again, Oregon popping in there, number 3. Number 2, North Carolina. Number 1, Oklahoma. That one makes some sense. Let's get to the trading side of it. Natural gas trading. That peaked last year, February 4th through 10th. Right now, it's only about a 19% of what it was at that time. The hot places for those, a little bit more of what you'd expect. They can only muster a top 4, so I guess not a ton of natural gas trading searches going on out there in Google. Number 4, California. Number 3, Florida. Number 2, New York. Number 1, good old Tejas down. That one makes a wee bit of sense. We ran some numbers for the crypto as well. I think we're going to save those for the crypto rundown listeners. That's going to bring to a close our kind of our corollary to our year in review show. You wanted to get the correlation numbers for you last week. We got them for you this week. Hope you enjoy. I know a lot of you like that data. Again, if you're subscribed to the pro level tools over there at QuickTrack, you can run those numbers for yourself whenever you want. And it's important data to have at hand if you're looking at different product categories and where you want to invest in and how things actually trade against each other, particularly at times like this when it's all hitting the fan. That's when you want to have those numbers at hand. So check those out. And again, hopefully we can come back and listen to this show maybe later when you're trying to make those decisions. And speaking of looking at things later, we'll also crunch these numbers for the Google Trends again later in the year. We usually do it to kick off the year, then midway through the year to see how these trends are evolving. There's some search terms we missed, you think we should have hit on this week. Hit us up. Let us know. You know where to find us at Options on most of the major social media platforms. Questions at theoptionsinsider.com. That also works, of course. You can always hit us up if you're in the Secret Club via the live chat there as well. It's going to do it for us here today on the network. Back again tomorrow, noon Central, 1 p.m. Eastern. Volatility views. Will we have some fun Google Trends data for vol for this past year as well? Yeah, I think we will. So stay tuned for that, as well as, of course, all you Secret Club fans, back 2 p.m. Central for Options Oddities. Got some hot ones going off. Did I leg into maybe a short EDU straddle? I don't know. Maybe. We'll find out tomorrow on Options Oddities. Got all these live trades just sneaking in there now, a bunch of other fun stuff. So it's become a really fun show. Check it out if you haven't. TheOptionsinsider.com/Secret Club is the place to go. Then we're back again next week. Another episode of This Week in Futures Options. We'll see you then.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com FTSE.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.